Good morning, everyone. So it's Tuesday, August the 19th, 2025. Welcome to the Macro Snapshot, recording this in the morning as always. Pretty quiet day again, not a huge amount going on. You can see here that the only data we have in the US today is the housing starts. That will be interesting because there's been some sort of talk that the high sort of mortgage rates is preventing people from moving out of their current house and flipping houses and moving to a new house with a higher mortgage rate. And there are some signs of sort of softness in general. So it's just going to be interesting to have a quick look at that at 8:30. We also have Canadian CPI, which I'll get to in a second. But just in the meantime, let's have a look and see what happened yesterday. I'm going to just start with the oil market, just because we had a lot of European leaders in the White House talking with Trump. We also had Zelensky. No peace deals have been announced, no ceasefire has been announced, but it seems as though there is some grinding progress. There's talk of trilateral talks involving Russia, Ukraine, the US, and European partners coming up in the next few weeks. It's still going to be very difficult. There's still going to be the really tricky negotiations about those little provinces in southeastern Ukraine. So no breakthrough. But on the other hand, one could argue that the tone is more positive and constructive than it was, let's say, 6 or 9 months ago. And therefore, getting back to the oil market here, let's just have a quick look at that. You can see that oil continues to trade on the heavy side here. So well below all the moving averages. We'll just bring those up. Let me just change a couple of things here on my screen. Sorry, I've got a bunch of stuff. Right. So if you look at all the moving averages here, sorry, that's the simple moving average. I want the exponentially weighted moving average, which is those guys. Yeah. So you can see that oil trading kind of heavy here. And the fact that there looks as though there could be some sort of grinding peace agreement coming up over the next, sort of few weeks or months, or at least negotiations leading towards that. It just means that, the chances of sort of heavy sanctions on Russian exports of their crude oil are sort of low probability. And at this point, oil just sort of drifting a little bit sort of south, so to speak. Next stop could be about 60.75. Down here, there's a little bit of sort of horizontal resistance, maybe a little bit of support down there. We shall see. But at this point, oil market, not showing a huge amount of energy. In terms of overall sentiment, as we said yesterday, the VIX still very, very low. In the US stock space, not a huge amount of energy, just trading along the highs here. What we did have this morning, we did have the Home Depot trading with their results from Home Depot. I just had a quick look at the headline. I have to be honest and say I haven't had a detailed look, but what I did see is that the sales were a little bit lower than expected. You see just trading down in the pre-market, not a lot, just 50 cents here, so probably pretty much in line. So Home Depot, coming in reasonably, but again, I'd have to look at the details. Let's have a look at that. That could influence some of the other stocks today. But just in general, let's also look and see what's going on. I just want to look at the euro now in terms of the let's look at a few currencies here. So in terms of the negotiations yesterday, as I say, no big breakthrough agreement, but nonetheless people are speaking. But still, there's a sort of understanding that there's a long way to go. So if you look at the euro here, not exactly ripping on the news yesterday. In fact, yesterday was a bit of a sort of a slightly negative day, and just really in a sort of a trade range at the moment. And the reality is that the main impetus for this is probably going to come from the US side, and the main impetus for the US dollar is going to be Jackson Hole, which we all know. Powell speaking on Friday at 10 a.m. We do have today Michelle Bowman. Now we know that she was a dissenter at the last meeting. She's potentially in the running for the takeover at the Fed. She has an interview this morning, I think, on Bloomberg TV. She was probably going to be asked about 50 basis points cut. Would she vote for a 50 basis point cut in September? We know she's a bit more on the dovish side, so it'll be interesting to get her perspective from a dovish perspective. What has been moving a little bit? I just want to show you the pounds. And more particularly the gilts, the 10-year gilts. You can see here that over the last 3 or 4 days, they've had a pretty nasty sell-off, and in general have been trading very, very heavy. And part of that is because the yields are up. So why are these yields up? We have the Debt Management Office. So you remember in the UK, there's this sort of semi-independent office which looks at the government spending and essentially wags its finger in public if they think the government is out of control or not showing fiscal discipline. And remember back in, I think, 2022, with Elizabeth Truss, who was Prime Minister, it was the Debt Management Office which really sort of signaled publicly that these tax cuts weren't really sort of funded, and that caused that initial explosion with the 10-year yield and the 30-year yield over in the UK. We're getting a similar kind of situation here that both the 10 and the 30-year are selling off quite hard, and that's because the debt management office is talking potentially going to announce yet more issuance coming up, I think, in October and November, and the gilt market will not like that, and therefore is punishing the gilts. We also have a rating on the UK from Fitch coming up this Friday. So maybe there's a bit of nervousness around that and a sort of a feeling that possibly, there could be some downgrades there. But if we look at the pound sterling here, let's look on the futures. You can see the pound sterling not collapsing or anything, but not really on those high yields going up. So remember that in sort of normally the situation in developed markets is that as the yields go up with a little bit of extra inflation or for whatever reason, the currencies tend to appreciate with that. And we do have it more in developing nations, third world countries, this whole idea of as the yields going up because of fiscal lack of discipline, the currencies actually go down rather than going up. And it's just interesting, not saying that the UK at this point is a developing market in any shape or form or a third world country, but it is interesting to note the dynamics, the relationship between the yields, their opposite correlations at the moment, that as the yields are going up in the UK, the pound sterling, as you can see here, is actually selling off a little bit. So what we do have tomorrow, we do have the CPI numbers early tomorrow morning our time in the UK. Again, if that is sort of hot, that could put more pressure on the yields, and again, that could put some downward pressure here on the pound. So something to look out for. Also, kind of interesting in the context of the UK is the euro pound, which I have here, and you can see here that euro is actually sold off a little bit, but making a little bit of a comeback here on the pound weakness. So let's look at developments over the next few days in the UK with the CPI numbers and also with the issuance. And we might get a bit of an update, as I say, from the debt management office. And not to forget on Friday, although obviously we'll have Jackson Hole, which is probably going to swamp the whole FX market. But on Friday, as I said, we do have a Fitch rating due on the UK. So that's interesting. Now, in terms of CAD, let's just look at the chart here. We have the CPI numbers coming up. So I'll just bring up the chart. Let's have a look at the chart here. So you can see that, obviously the US dollar sold off a lot after the sort of the tariff kerfuffle blew over, and we've had CAD strengthening almost like about 10%, I think. So, but over the last couple of months or so, we can see here, what's it, last year's sort of 4, 5, 6 weeks here, we can see that the US dollar has started to consolidate a little bit. We can see that some of these moving averages, see the 20 has just crossed over the 50 EMA, not yet over the 100, but starting to flatten out a little bit. And so it could be that the US dollar is stabilizing a little bit. And let's just have a look and see in terms of Canada. So if we look here, let's just look at what's expected tomorrow. And the CPI is going to be interested. I'll just bring this up just because of what's priced in for the Bank of Canada. So let's just see here what's expected. So as you can see here, the non-seasonally adjusted month-over-month number, the market is, the consensus survey here is for that to actually rise a little bit from 0.1 up to 0.3. The year-over-year number to come down just a little bit here. If you look at the core number to remain flat, and the trim, which is of more interest to the Bank of Canada, to actually go up a little bit. So the point is here that you've got a year-over number here, the core number at over 3%. So the trim or the median, which is really the one the Bank of Canada looks at over 3%. And their range is really between 2 and 3%. It's not like a hard 2%. But the point is that that's still a little bit on the hot side. And if you see here, just looking at CAD here, you can see that what's priced in, inflation is, it's not low, but the point is there are risks to growth in Canada. The sort of the jobs numbers and the GDP and just general growth numbers, there are some worrying signs. And obviously we have the whole situation with tariffs. And so the point is here that even though inflation is on the high side at 3%, the thing which the Bank of Canada has to balance is the risks to growth. And so I would say that if the number comes in line or maybe even a tenth softer 2.9 or something like that, that could give the go-ahead for the Bank of Canada to keep on cutting. Now, we know they've cut over 200 basis points, but it's actually interesting looking at the pricing. This is for Canada here. And you can see that in the next meeting, so September, October, December. So even by the end of this year, only, basically 78% chance of a cut, about 20 basis points priced in. So the next full cut, if we could call it that, it's not priced in until next spring. So we have a meeting here halfway through March. So a lot more sort of dovish, so to speak, as a forward, sorry, a lot more hawkish than, let's say, the Fed. And so what's interesting here is that there could be sort of internal pressures, both and external pressures on the Bank of Canada. The internal pressures could be whether the growth situation, the jobs numbers start to deteriorate a little bit. But also the external pressure on the Bank of Canada could be if the Fed decides to cut, once, twice, three times this year, and then suddenly this pricing does look a little bit underpriced to me, in a sense, a little bit too hawkish. And you've got to say that, the first full cut not being priced until the April meeting here, or sort of March, April, 96% or 104% here, you'd have to say that possibly by the end of the year, that needs to go a little bit more dovish, and one more cut would not be out of the realms of possibility. So let's have a look at the CPI this morning and see what's going on. Oh, just by the way, I did have just the pound here. This is the pricing for December in the UK, and you can see here that December pricing in terms of the BOE. I forgot to say at the beginning of the video here. You can see here how that's starting to sort of spike up a little bit more sort of hawkish, interesting there. And we see just in terms of the BOE, what's actually priced in. You see the next cut is not really priced in, a little bit like Canada, until next sort of March, April here. So let's just keep an eye and see what's happening on those sort of other two central banks here. In terms of other stuff, let's just go back to the US. And you can see in terms of the Fed here, not a huge amount of sort of action. What we did see yesterday was the bonds going up in yields a little bit. And so you can see here that the pricing for December is now 53 basis points, so just over two cuts. And remember that earlier on, like a sort of a week ago, so this was at like I think 2.6 cuts, 2.7 cuts. So the market's come in a little bit more hawkishly. I'm not going to say hawkishly, but seems to want to settle around, two cuts by the end of the year. And again, for the September meeting here at 20 basis points, 20.9 basis points. So not as dovish as it was. I think at a certain point it had been up to 24 basis points, but certainly the market expecting a cut, and so there will be all hell to pay if Jerome Powell is a little bit hawkish in another few days. The market really expecting him to sort of cement or give the green light for a cut in September. Let's keep an eye on that. In terms of other stuff, let's just go back to some of the markets. Again, just want to quickly finish off with the bond markets here. So as I say, you can see yesterday, if you look at the interest rate, let's go for something like June 26 for the front end of the curve on the SOFRs. You can see that last few days we've just seen those yields, the price go down, and therefore the yields go up a few basis points. You also see that on the 2-year, the front of the curve here, you see that it's just sort of come down a little bit over the last few days compared to the high back on the 1st of August, which of course was the revisions to the job numbers. So the market here, pretty much saying, okay, we're in wait and see mode, middle of summer, let's see what happens at Jackson Hole. And that's about it for today. So I think I'll leave it there, guys, because as I say, not a huge amount more to say. We have Michelle Bowman interview. We have the Canadian CPI coming up at 8:30. We have some housing number coming up at 8:30. And then that's about it. And of course, let's keep an eye out for any news from the White House about further developments in the situation in Ukraine. Okay, thanks very much. Have a great day, and I'll continue this tomorrow. Thank you.